Welcome to the Home and Finance Show. I'm Janis Bradley with JB Real Estate Consultants and my co-host,
Diana Rice-Wilkerson, loan officer with Fairway Independent Mortgage.
This show is designed to provide you with credible and current information about buying, selling, renovating, refinancing, building your home and credit. So now it's going to be on with the show, but let's just kind of talk a little bit about what we may hear from our co-host, Diana Rice-Wilkerson, who does her, what do you do, Diana?
I show you the money. That is my job.
So Diana, since she shows you the money with
Fairway Independent Mortgage, the best mortgage company on the planet.
Well, you know, I've said a couple of times, get your pen and your paper, because we have so many questions that we were going to ask Diana about income, because so many of the buyers just have no idea how it works. So we want to help you understand, so it's going to help everybody buy more homes and get financed by Diana Rice-Wilkerson.
Absolutely.
We've got Shelley Goodsman with us also to help Diana answer some of these questions.
Yes.
And we are ready. Are you ready, Diana?
Yes, I am ready. You know, one of the things, Shelley and Janice, that people have questions about are different variations of income, varieties of income. Not everybody works a traditional job. Some people are self-employed. Some people do work a traditional job, but they have varying hours. It's just a myriad of things. One of the things that some people get in terms of income, and they're not sure whether it can be used or not, is some form of Social Security income. Okay. So we're going to talk about the Social Security income and a few other types of income and how income can be used when it comes to getting a mortgage loan approved.
Okay.
Okay, so I think I have provided some questions that have been given to me. I would like for you guys to ask me those questions, and you know, do ask me more questions. These are just kind of the lead-in questions.
Alrighty.
But if you have other questions, because the goal is to make sure that our viewers really do understand, and they can pass that information on to someone else. Like share it on Facebook, like share the post. Okay, there you go.
Well, I love one of these questions here because it's so applicable right now, and that is the generation of borrowers that have roommates.
Yes.
And so there are multiple people contributing to the household income, and so that is a big question. If I'm renting one or two of the bedrooms in my home, can I use that income to buy a house for myself?
You know, it's a great question, and you are absolutely right. A lot of folks are sharing housing. And so when they're looking maybe to buy now or maybe upsize or whatever, then they're wanting to use that income to help because this is what's been helping them already. The only way they can do that, though, is that they have been counting that income on their taxes as border income. So it's a form of income. So in our business, you have to be able to verify income. If you say, hey, I'm getting X amount of money each month for income, it's got to be reported a certain type of way. So typically, if you're working a traditional job, that's going to be a W-2. If you're self-employed, that's going to be a tax return, right?
Right.
In this case, if you're renting out part of your space, that's going to be a tax return. There's a Schedule E on the tax return for real estate, and I think some other types of activities, but I'm pretty sure it's the Schedule E. If you have questions about it, definitely you want to ask your tax preparer. But again, if that is your thought, you need to be reporting that on your tax returns. I would also say you want to have reported that for at least 2 years. Anytime we're using a different form of income, we're wanting to see at least a 2-year history so that we can say that it is somewhat stable, right?
Right.
If it's only been a year or if it's been 6 months out of the year, say it's on your tax returns, but it only covered June until December, then that wasn't a full year, right? There might be programs out there that we would call non-conforming programs that may use border income in some other way.
I like that border income. Right.
Border income, but not to be mistaken with the mainstream of investors. Mainstream, on the tax returns, at least a 2-year history.
Well, I think with this generation, they're just so on top of it. They do report it on there because the people who are renting from them want to get credit for that rental that they paid throughout the year. So it really does help both sides of it.
Yes.
So Diana, I have a question.
Yes, ma'am.
And that is, this particular person is asking about how to handle the Social Security. Apparently, the daughter has severe asthma, so she receives Social Security disability income. Now, can that be used also to qualify for a home?
Yes, it can. So with Social Security income, And Social Security, they will send out an award letter every year at least, and possibly multiple times during the year. But there is really a classification on the Social Security awards letter that tells us what type of income this is. If it's a disability for a child, right? The key with that is if we have a Social Security awards letter that is attached to a person being disabled, no worries, okay? We can use that letter as income. We used to have to get letters from the doctor to say that it was a permanent condition. But when HIPAA came along, all of that went out the door. Matter of fact, we used to have explanations in the files with
I remember that.
And if you really want to get in trouble today, have an explanation about someone's medical condition in a loan file. You cannot go there, okay?
Yes.
So if it's a child, and sometimes that child is a minor child, but sometimes that child is an adult child. The key there is that the payee needs to be the borrower. So let's say it's mom and mom has a daughter, then the payee is going to come out mom for the daughter or mom for the benefit of the daughter. So that's what we need to have. And then of course the corresponding bank statement to show that that money's going into the bank. Yes.
I have a real quick question about Social Security income, and this is just from quite a while ago. I don't know if it's changed, but do you get to gross up Social Security income at all, or is it just, is it the gross, is it the net, or do you get to gross up just a little bit?
That is such an excellent question. You get to gross it up.
Oh, great.
So, and essentially, viewers, what we're talking about, when we're qualifying a person for a loan, we're using gross income, meaning the income the borrower makes before taxes are taken out. When you're getting Social Security, in many cases, it is not taxed. So here comes Social Security, nothing's taken out. So in order to get a more equitable, or give the borrower a more equitable situation when it comes to counting income, we gross it up. So we assume, let's say this borrower has a 15% tax bracket. So we gross it up 15% on an FHA loan. So we can take $2,000 and then that becomes $300? Yeah. So that becomes $2,300 a month. And that can be very helpful in a debt ratio situation. Conventional loans, 25%.
Oh, wow.
Okay, VA, non-taxable, 25%. Now, these percentages may change based on the person's income bracket. Okay? But to your question, can it be grossed up? Yes, it can be. Exactly what is it grossed up to? Generally somewhere between 15 and 25, but it can depend on the bracket of the customer.
That's really critical, especially when every penny counts for debt to income ratio. So
it is a big, sometimes when we can be putting a loan together, and let's say a person has plenty of income, right? And maybe they have some non-taxable income. Well, we won't gross up the non-taxable income if the current income through W-2 wages or whatever else is okay, right? Then you process the file, you get to the back end. And now you're fine-tuning things, and here's the debt ratio's a little high. And now you're able to gross up this income and save the deal.
Save the deal.
Oh, absolutely. So yes, an excellent question. And to our viewers too, this is income you want to report. One of the reasons I wanted to share these email questions is a lot of people think they can't report this income. They can't use it, is what I'm trying to say. They think they can't use it because it's for somebody else, right? Or they think they can't use it because it's not wages, right? The consumer, especially, and I get it too, because if I was them, I probably would assume the same thing, right? I'm not working, I'm getting this other income. Surely it can't be, justified or usable for a mortgage when in fact it can. So that's one of the points we want to make clear.
I think one of the other great things, I'm so sorry, Janis, I'm fine. One of the other great things I love, because people don't know about what all the possibilities are with Social Security income.
Exactly.
But when you're getting it for dependent children, can that be used if you have children?
Oh, yeah.
And if so, how long does that last?
Yeah, I was going to ask that.
Such a great question. Okay, so Social Security income, you might receive it because of a dependent child who's lost a parent. Right? Okay, and typically that benefit lasts that benefit will last until the child turns 18 typically. There has been some comments made that if the child continues to go to school, it may still last, okay? But I'm just going to deal with the 18 because I'm very clear about that one. I would imagine if the kid goes to school, we're going to need documents and a lot of other things, right? So I'm just talking about clear cut. If we can see that the child is 14 and they're getting Social Security benefits because of the death of a parent, and we know we're going to close before they turn 18, they won't turn 18 until 14, 15, 16. Yeah, it'll be beyond 3 years after closing before they're 18.
Okay.
They won't turn 18 within that next 3 years following closing.
Then you can count it.
Then I
or
can
include
count
it.
and use
Okay.
it. Yes.
3 years.
3 years.
Okay.
But if they're going to turn 18, the assumption is that income may stop. So therefore we can't use it. So a general rule of thumb, and again, when I'm talking, I'm really talking not about Fairway's guidelines, but the agency guidelines. So we're talking HUD, FHA, VA, Fannie, Freddie. So the whole notion is that any income we're using, that it has to be likely that it will continue for 3 years after closing.
Okay.
So once again, we stay away from that one too. I mean, normally when a child is receiving that kind of a Social Security income, is black and white. It's just child's a minor, their parent, is deserving of this benefit, deceased parent, and they're going to get it. There's another form of Social Security income. It's called Social Security Supplemental Income. That awards letter looks different. It's SSI. It's Supplemental Security Income. I don't even know that it has social in the word, but it's SSI. Where I see this oftentimes is when there's a disabled child. I'm not sure of the condition of disability. The parent has income, and this is almost like the parent's income is not high enough, right? To the parent's income is low enough that it qualifies them for this supplement. I'll put it that way.
Okay.
In those situations, the parent may have to report their income ever so often, and you might see this income change a little bit. Does that mean you can't use it? No. In those situations, we may average it, right?
okay.
So again, we're looking at how long will this person be getting this income, right? How long have they gotten the income? And then if it's an income that fluctuates, which SSI tends to do, we will just average the income.
Okay.
But perfectly usable, guys.
Yeah.
I mean, it's interesting how
I think that
I have
probably
stumbled
stops a lot of people.
A lot of people, because they think that this is for my kid. So it's like, I'm getting this money, but it's for my child. I'm getting this money, but it's for my parent. I'm getting this money, but it's for my husband. If it's a benefit for them personally, they don't think they will tell you about it, although they're wondering, can it be used?
Yes.
Right. But if it's
sellable?
coming for the benefits of someone else, the tendency is they think it can't be used. And so if the borrower, like we ask the borrower to supply their income, but we don't go through, do you get this type, do you get that type, you know what I'm saying? So if it doesn't come up in the conversation, let's say run into a debt ratio issue, right? I'm like, hey, Shelly, I got a little bit of a debt ratio issue. Do you have any other source of income? And then that's maybe when you hear, yeah, well, my daughter gets, or my son gets, or I get. And it's like, hey, we can use that. Yeah.
Nice.
But the key is in your name and who's ever taking care.
Payee. That is exactly right. I've had one situation that I recall where the payee on the check was the disabled person. It was kind of like this person's power of attorney, I want to say, so to speak. The power of attorney handled the money, so the account that was opened was an account for the benefit of the payee.
Right.
And our underwriter did accept that.
Yes,
The check came in the person's name, but but that account showed that he was getting the money. You know what I mean? So yeah.
Wow.
There might be some exceptions, but I would say the general rule is that it's going to be a relative of some sort, and that check needs to be in the person's name.
Okay.
So question, Diana. So this particular person says, I have great credit, but my income is limited. But my partner does have better income, great income, but marginal credit. So will I be able to use this significant other or this partner on my loan to buy a home?
That is a frequent question. And the answer is no. So when I say use it, when you say use it like that, in my mind, we're originating a loan and we're saying you make X, and then we're adding another lump sum of money coming from the partner. In that situation, the answer is no. If we're using someone else's income like that, then we also need, that person needs to be on the application, we've pulled credit, the whole bit. Where this could possibly be used, rare situation, but it could possibly be used in a manual underwrite. Let's say we're dealing with a manual underwrite, debt ratios are tight because we're only dealing with the borrower's income. The borrower could write a letter of explanation and say, while this loan's in my name only, this is my household income, this is the income my partner is bringing in, along with some additional information. That may cause the underwriter to sign off, but they're not using the income and the debt ratio when they do that. They're just acknowledging the fact there's more income in the household.
Like a compensating
Like
factor.
Are you a loan officer? Yeah, exactly, Shelley, a compensating factor. And that's where I think people have heard that being used, but they didn't realize that's how it was being used. They just know, well, so-and-so's person was able to use their income even though they weren't on the loan. Whole different ball game. Whole different ball game.
Seems like that happened kind of back in the day, every now and then. But,
I think it did happen back in the day.
But of course, that was more manual underwriting
Yes,
also.
that's exactly right.
What we did.
Today, it is like that computer, AI, and whoever else they got in
takes
that
a
little
look at
box.
it.
Yes.
Foster care. All righty. I've received foster care and have for 3 years.
Good.
So can this income be used for mortgages? And
It's a good
does
question.
it depend on the type of mortgage?
Yes. So foster care, number one, is a non-traditional source of income.
Okay.
So once again, kind of think if we're dealing with non-traditional sources of income, we always want to see 2 years of receipt. Okay. That does not need to be tax returns. Foster care income is not typically on tax returns. It's non-taxable.
Oh, I didn't know that.
Yeah. So you're going to
great
be getting
information.
letters from the foster care agency, whoever your what do they call caseworker, somebody
Okay.
like that. But we want to see 2 years, a 2-year history. We potentially may average that income over the last 2 years, but some people have a foster situation where they have the same child. They have had the same child, they intend to.
Yes.
Okay. Others have children who move in and out under certain circumstances, right? So we may more likely than not average the income because of the in and out, because how many kids you have and a lot of other things determine the amount of money. You may not be getting the same money each month. So when it comes to foster care income, number one, yes, it's permitted. It can only be used with, based on my knowledge, FHA and conventional programs.
Okay.
And it could be used with USDA, but I don't know. I don't know enough. That's a rural type loan product, so I don't know enough about it. Where it cannot be used as income is on VA loans.
Oh, interesting.
But what VA will do, one of the things VA does, it's amazing, is when VA, and this is all automated, when they're looking at a loan, they're looking at gross income, debts, and how many people are in the household.
Right.
So if you've got yourself, your hubby, maybe your wife, and like 4 people in the household, the 4 kids, that's 6 people, right? Then they're wanting to make sure out of your income that you have coming in, your bills you're actually paying out, that there's enough income to take care of these 6 people. It's called residual income. If that number is less than what's needed, they're going to add that foster care income to
Really?
that number.
Okay.
So it doesn't get used in the debt ratio analysis, but it can be used in the residual income analysis.
Okay.
And the other way I think it can be used, if not this way, I'm telling you what else VA does though. They do this other thing where they will take and I'm not going to talk about it because, first of all, I don't want to confuse people. But I tell you what, they have some wonderful ways, I'll put it this way, to get that veteran approved. They have some
Okay.
wonderful ways.
Interesting.
But yeah, that's how they use foster care with residual income.
So with the foster care, would it work the same way as if someone is on the Social Security that we talked about? So my question, would it be aged out also?
Grossed up?
Well, no, aged out. So.
Oh,
if
yeah,
they-
yeah.
Okay.
Absolutely.
Okay.
If you've got foster care kids that are like 15 years
Right.
old, yes. Now, I can see that not happening. I can see that clearly happening if this has been your foster care child all this time.
Okay.
But if you've got foster care kids moving in and out,
okay.
it's just going to probably be the average, especially if your kids, because on the report you get from foster care, it actually gives the date of birth. So you know how old the kids are that this family's taking in. So I would say the underwriter, it has to make sense to the underwriter, always has to make sense. But if all your kids are that 15, 16 age, you probably are not going to be able to use it because the income has to last for 3 years, the group of kids you're fostering typically will not. I'm not saying that's absolute because there's always going to be some kids that need to be fostered, but just kind of knowing how underwriters think, I would say that's something I would vet up front, quick, fast, and in a hurry before I pre-approve the buyer.
Okay. I just want to brag on you guys just for one quick second talking about foster care income.
Okay.
But I remember you had a client a couple of years ago, and she had 4 of her own children, and she had fostered before, but there was a family of 5. And the foster, because she had fostered before, but this was 5, and she wanted to keep the 5 kids together. So, that was a big, big deal. And Janis was able to find her a home. Not only did you do the financing for her, but Janis was able to find her a home that had a full basement and plenty of room to make extra bedrooms out of it was a 2-story house, but they needed every bedroom possible. So I know foster income it's extremely beneficial, but you're giving something really incredible, but you're getting a benefit too. So she's able to provide them a home. So a little praise and brag,
All the
guys.
fostering people I have worked with, though, have adopted their children. The children. Yeah.
Your heart, I can see it, and those are angels. The fostering parents are just angels because
they are. It's a gift that God gives them.
That is exactly right. That is exactly right.
No doubt about it. So, you have a question?
I do.
Shelley? All the
Kelly,
L-boys?
whoever. Okay, so I own my own home, but I find myself struggling to keep up the taxes and property insurance because of my, limited income. I've tried to get a small loan from the bank, but have been denied. Is that my only recourse? And my husband has since passed. So, any suggestions that you might be able to offer in those circumstances?
I think, unfortunately, many of our seniors are in that similar situation. They probably either owe very little on their home or they've paid it off, but they have a limited income, especially with inflation and the whole bit. A suggestion that I really would make is looking into a reverse mortgage. I actually closed on a loan with a customer a couple of years ago now, and her husband had passed in September, and I spoke with her. Her tax preparer was actually doing her taxes, and she was just kind of explaining how difficult things were. And the tax preparer contacted me to talk to her about a reverse mortgage. And as it was, her husband had passed, so her Social Security went up a bit because she started receiving his Social Security, but that was it. The retirement he had in place did not pay her after he passed. So the only thing she had was Social Security. So what we were able to do, she had a small mortgage balance, but it was like probably a $700 or $800 a month payment. And by the time she paid everything else, right, she just didn't have a lot left. So what we were able to do, because she had a nice equity position, was refinance that loan into a reverse mortgage. And so what does that do? That just defers the payoff of the mortgage. It's like you are borrowing money, but it kind of parks it over there, and the interest is accruing. And when you pass, your heirs, or if you decide, hey, I want to downsize, maybe get a condo or whatever, just go ahead and sell your property, pay off your loan, and keep it moving. But what she no longer had was that big chunk of money coming out of her. So my advice would be to all seniors, and I'm certainly willing to help and talk to you. We can do proposals, we can talk about however you'd like to talk about it. And I do understand the fear and concern. The programs that we're using are HUD programs, so we only use the safest and the best. You're not going to be in any deficit situation where you have to pay more back on your home than what it's worth. Or anything like that. But I would definitely say that conversation is worthwhile having. And if your kids are going to be involved in the decision, I would say have them there too. But that, for my customer who I assisted 2 years ago, that just made a difference in her quality of life, in her whole spirit. I mean, was just uplifted because otherwise she just had this on her mind every 30 days. Here we go.
And whether it was a house, even if she sold it, she still would have to rent.
That's
I mean,
exactly
just
right.
limited income.
Limited income.
So
Yes.
great service.
It-
Great service.
Totally changes how that you're able to live, not survive, but you can actually still keep living. And I think that the enjoyment of life
Right.
makes a huge difference
In
by
this
not
case,
having that
staying in
mortgage
our
payment.
home.
Right, exactly.
It was more than.
Exactly.
So here's a question. My home is nearly paid off, but I'd like to make some improvements. Should I get a home equity loan or a regular loan? I'm not sure how to tell which is which. And of course, Diana, I know you get that all the time.
All of the time.
You know, you are so great at being able to decipher, you know, which loan will be best for this particular customer, because just like anything else, everything is the same.
You know, and that's such a good comment too, Janice, about everything's not the same. Number one, and this is where when this advice, talk to multiple lenders when you're looking to borrow money. It is sound advice, but you
Everybody's gonna
almost
give you
need one of those. Well, you know, if you're going to a foreign country, it's like you got English.
translator.
Yeah, translate. Yes. You almost need to have your little translator with you as you're talking to these lenders, so you'll know what to zoom in on and what not.
Because tomorrow they might say, "Oh, no, I didn't say that."
Absolutely, absolutely. So the only way a person knows is to see what you got. Look at your current loan, look at what type of home equity loan you're trying to get, understand why. And one of the main things about home equity lines of credit, typically there are reverse mortgages. I'm not saying that's good or bad, but that can change your payment, okay? And the other part is pretty standard with a home equity line is you have a drawdown period. And so let me give you an example. Let's say you have a reverse mortgage for $10,000. And let's say initially you might need a couple of $1,000s to do some work at home. Okay, great. And then over time, you know, it's a little bit here and it's a little bit there. And then, you know, you maybe get to $9,000 and you're making your monthly payments. And then all of a sudden you get notified by the bank that you have to convert that now to a loan where you're making a fixed monthly payment
Second mortgage.
so that you can pay it off. Because up until that point, your payment typically amortized over whatever period of time is not going to pay the loan back.
I see.
You've got interest and you've got some principal, but that's not going to pay the loan back. So typically it's a drawdown period and then there's a locked out period. Okay,
cap.
drawdown and locked out. So number one, to that person who's saying, should I get a home equity loan? Know that first. So this is my counsel to customers is, hey, if you're getting a home equity loan, you need to be intentional about paying it off. You need to know you're going to put a chunk of money down on it every month so that you can pay it off. And I'm always happy to talk more about that when the time is necessary. But it looks like in terms of time, we are winding down, Janis Bradley.
Hope you enjoyed Diana Rice-Wilkerson. I know you are so excited about knowing more. See you next time.
Bye-bye.
Bye.